Alright, so let's take a look at Nasdaq and ES first, the indices first, and then from there on, let's take a look at other assets. Alright, cool. Last week was such a week. It was wild. Um, so before closing the week, as you guys know, the buy side on the daily was rated. We got a strong reaction from there, and the Friday candle close formed a fair value gap on the daily chart here. We still have a dealing range from the daily sales from the order block to the new high. This high it's not a swing high as of now, so I would wait for it to be confirmed first. So Monday's candle has to close below it for the dealing range to be confirmed, and after that, probably like after Monday, this will be the framework I'll be trading in. As of now, though, we are still in a range. It's really hard to tell whether this wants to continue higher or go lower. So the safest thing for us to do is to wait a little more. Hold on. Wait a little more to get more information. Like this range has to be traded outside first, whether it's upside or to the downside, like that. Then we'll have high probability conditions. Whether if it breaks down lower first, then you can target the south side on the daily here, right? That will be a high probability target. If it breaks outside to the if it breaks above, it breaks out to the upside, then it's another story because we are in all-time highs. So we gotta use standard deviations and look for intraday price action, stuff like that. For that, we will need more information from the lower time frames. But as of now, since we're gonna be delivered step by step, I'll be definitely aware of the daily fair value gap within this. Assuming this is gonna be the swing high, I'll be aware of this fair value gap on the daily. On the 4-hourly, things might be a bit cleaner. So on the 4-hourly, we have a confirmed dealing range from 17,372 level south side to Friday's high, right at all-time high. So this is the dealing range on the 4-hourly. And the lower portion of the daily fair value gap here is in a discount with a BPR here on the 4-hourly. So this is a high probability point of interest for me, just also because the 4-hourly fair value gap here was already inverted, so it's violated. So I would expect a pullback on the 4-hourly into maybe EQ of the range, or maybe somewhere here, the breaker over there. Just kind of like manipulation lower here, something like trading into those PD arrays, then maybe run the high one more time. It doesn't have to run it, but we got to see how it reacts at EQ, right? So if it gives a strong reaction at the range equilibrium, that means the chances are better for the run highs. If it doesn't react at EQ, right? Especially if it violates the BPR here, then we can look at this low and the daily sell side. As of now, though, I would really like to see a pullback into these PD arrays on the 4-hourly, because we don't have a sell side on internal liquidity just yet. We have the range, but no internal liquidity, so the pullback is the much expected here. Now the question is, where can it pull back into and have a reaction? That's the real question, and I don't have an answer to that, right? We gotta trade step by step. But the first thing that looks good to me is definitely equilibrium of the range, the daily fair value gap's lower portion, which is this red box here, So this BPR is a high probability point of interest for me on the pullback. Let's go down on the hourly chart, see what's up there. On the hourly, let me see, delete that, make it cleaner. So on the hourly, there's this BPR was used already as a low risk sell after the sell side, after the buy side raid, right? Typical 2022 model. We broke the structure to the lower. We have a wick though here, which is not that good. Um, Zoom in a little bit to see it better. Yeah. Because Nasdaq just violated the lower fair value gap on the hourly, so this is the manipulation fair value gap, right? And it's violated. I would like to see price trading below it, not coming back above, right? I don't want to see this kind of price action. I would rather see Nasdaq staying below that fair value gap, trading below, and maybe using that to raid this sell side into the fair value gaps on the hourly. I don't think the sell side is going to hold. My expectation is like even lower, because essentially the dealing range is from low to high, and those fair value gaps are still in discount, rather premium. My apologies. So I want to see the old breakaway gaps getting traded into. This is probably going to be high resistance liquidity run though. I'm not expecting like a sharp move lower. And from there on, it's not easy to anticipate this, but two things can happen really here. Say we traded into this discount fair value gap, right? And first thing, what Nasdaq can do here is it could trade down here, right? Form an internal swing low and bounce from here and keeps running the highs, right? Goes to all-time highs, or that's the first scenario. The second scenario is trades here, bounces back a little bit, induce long positions, just collapse on them and raids the sell side. But it's really hard to anticipate that kind of move just yet. You gotta see how it reacts once it trades down into the equilibrium of this range, into the BPR and the daily fair value gap's lower portion. But considering how Friday reacted, the buy side raid here, I really want to see this low, but it comes to timing that sell, um, when it comes to like, and you gotta look at it step by step, right? You can't just mark this low as your sell side and say like, oh, this is a drawn liquidity. Yeah, it might be a drawn liquidity, but is it high probability? As of now, it is not a high probability drawn liquidity. On the 15 minute, so there is, oh, let me delete everything so we can see it better. On the 15 minute, the first thing that I notice is this small consolidation here. I believe those lows at 17,850, 60 level should be the target for Nasdaq here. And in terms of market maker model, it seems like we are in a market maker model's first stage, or the second stage rather. So there's a order block here which shouldn't be violated anymore if it wants to go lower. There's I believe this is an SMT divergence with ES. Let me check that out for a second. Let's see. Yeah, that's an SMT divergence, bearish SMT. So because there's an SMT divergence at these highs on the 15 minute, the highs where divergence happened should be really safe. So anything, so I don't expect price to just rally that high. The high that causes the divergence, right? That high should be safe if it wants to get down into the original consolidation sell side target here. I think this kind of delivery should happen earlier in the week. So I would expect like either on Monday it delivers right away, or maybe it chops a little bit, like gets a reaction from here. On Tuesday it rallies lower. But what's important is how it's gonna react after taking the sell side. That'll be more important in the long run. And we are in a discount area as of now within a fair value gap here. This looks like a second stage. It looks like it's setting up for the second stage delivery right now to me. So, 1 second. So how I read this is essentially this fair value gap. After the inversion, any kind of return back into that fair value gap is a low risk sell. And then price comes back up into this order block here, right? These highs are touching that order block. That is the first stage distribution. Takes out the sell side here, right there. Now we are in a fair value gap, and I would expect going lower as a second stage redistribution into the 15-minute sell side target from liquidity. Well, let's take a look if we have a bearish SMT at lows though. There's a bearish SMT a bullish SMT present at lows with ES. So because of this SMT, the bullish one, I wouldn't expect the 15-minute fair value gap to be respected. So this is a low probability fair value gap for me. What I would expect instead is, so that we have a range equilibrium right about here. I want to see, because the bullish SMT is present, I want to see price going into premium one more time, right? Maybe induces longs, and after like maybe this fair value gap here, start selling off. So I want to see this bullish SMT get faded. But that divergence will definitely cause a deeper pullback. Essentially, if we trade back into premium, the price is being offered one last time in a premium area, which will be a deeper pullback in this case, and then selling off from there is what I would expect going into Monday. So I would definitely be mindful of this fair value gap. We also have a breaker. Maybe it might give another SMT divergence above the highs here with a yes. Seems like possible. Definitely expect something like that. I'm trying to see if I'm missing out any more information here or not. There's also breaker block present. So this is the breaker block. Bearish breaker. Because we have a breaker there, it doesn't even have to come up to this fair value gap here. It could just like use the breaker block high to keep selling it off. But essentially that area is in premium. And then there's old order block here at around same level. Might be a point of interest as well. But regardless of what it does here, when it comes up into premium, you gotta wait for a lower time frame confirmation, right? You can't just like sell short thinking this fair value gap is going to be utilized, because you don't know. Maybe it'll be right now. Maybe it'll just like respect this fair value gap and go lower immediately. You don't know that as of now. I I wouldn't expect that though, because SMT, bullish SMT at the lows. Anyways, let's take a look at ES. ES is definitely much stronger. Now looking at ES, it's totally a different story here. Just because ES traded above the high, right, with an impulse, right? So before this run, there was a short-term range here, right? This is a range-bound market, and that range has just broken to the upside. Now looking at ES, that tells me that because we just broke the range to the upside, it'll likely to continue pressing higher. That's what it usually that's what I usually see. Like whenever the higher time frame range is broken, it just keeps pressing higher and higher and higher. So it's totally another story, different story here on ES. So here we have a new range from this high to that from the low to high, the new high. This high is not a swing high just yet, so I wait for it to be confirmed first. Otherwise, sky's the limit, because as long as you have unless you have a swing high, you don't know, you can't project where it could potentially form a swing high, right? So this is a low probability dealing range as of now until the swing high is confirmed. Wait for that three candle formation at highs. On the 4 hourly, so on the 4 hourly we have a dealing range, right? So I'll use that instead. From Friday's high all the way to lows here. You can also use this, not much of a difference. I'll keep it here. So FMC really delivered from the rejection block on Wednesday. Strong rally. Same thing on ES though. Like I would expect ES to form a swing, internal swing low first, somewhere around like maybe this breaker block here, at around those ranges, like somewhere here, and keeps pressing higher from there. Let me draw the daily fair value gap. We'll just see how it aligns with the 4 hourly. So we had daily fair value gap CE, the mint level. Looks kind of good for me. Anticipating it pull back into there. Here. Rally higher from there. The sell model is not there yet for ES though. I want to see ES catching up with Nasdaq's down move. I want to see this breaker. So we have this breaker here, right? I want to see ES breaking below it. I want to see the low of the THOR block getting violated. There's not a lot of information here on the 4 hourly at highs here on ES. We'll go on the 1 hour and see what's up there. Don't even take out the lows yet. Those lows are suspicious though. I think they're going to be tagged out. Looking at the hourly though, I would expect ES to just like give a deep retracement here into this old inverted fair value gap. Something like this. Here into also this order block. Uses that to raid to the lows here, the lows there. From there on, I think it'll just follow Nasdaq for the pullback, right? Until Nasdaq stops, yes, we'll just keeps printing lower and lower. Probably a high resistance, liquidity run kind of thing, like slow grind lower and then rally. Let me pull the daily CE again, though. I want to see how it aligns with the hourly chart. So the first thing I notice here is the daily CE is also aligning with an order block on the hourly chart, and also the old highs here, kind of a similar area. So I would expect the sensitivity at around those levels for potential run. But again, I want to see how it reacts from those levels first to determine whether it wants to keep going higher or not. But it seems like on ES, it seems like it will keep going higher instead of targeting the daily lows or the intermediate term lows. We'll see how it goes on ES. It's also like I want to see where and how New York opens on Monday. So essentially, if I tomorrow when I wake up, if ES is trading below this the order block here, that sets the stage for a market maker sell model into you know daily daily fair value gap mid level or whatever the case is there. On the 15, looks a little cleaner here. I'll delete those levels here. So on the 15-minute, I'm looking at the same level. So this is where the C of the daily fair value gap resides, like around these levels. Because of that, I want to see this consolidation, this tiny little consolidation area, to be targeted this low here at 5,052 here. But before, I want to see ES starting the market maker sell model. It seems like we are still in, we are printing original consolidation at the highs as of now. It needs to confirm the sell model first, and for that, it needs to break out to the downside of this range here. This range here. And that sets the stage for the sell model, which is essentially a higher time frame pullback though. It's not a distribution on the higher time frame. But on this time frame, on the 15-minute time frame, it sets up for a market maker sell model to target the sell side, and you'll see the same price action on the, let's say, 4-hourly as a pullback. Same thing on the daily. As of now though, I'm really liking 5,052 level on ES for a pullback. Check the dealing range on that. The safest thing to do here is just wait for the range to be broken, either to the upside or to the downside, before putting any trades in, putting trades on. Same thing on Nasdaq, because you essentially you don't want to be trading the consolidation, right? Long range, the EQ hasn't tapped yet. Okay, those lows are very suspicious. So we have also SMT divergence at these highs here, and here also with Nasdaq. Yep. Trying to find a POI here on ES, like in the range, but I don't see it. You know, I don't see a high probability POI here. All right, we'll see. We'll see. We'll see at market open tomorrow. All right, let me go on to. Let me read the chat real quick. Got that 120 point rally from the H4 IFVG. Do you see it now flipping onto resistance? Let me see it real quick. 4-hour. Oh, this inversion pair value gap you're talking about. This one. Yeah. I don't think it's gonna bounce from there though. Like I said, I would rather expect a deeper pullback into the lower time frame range equilibrium, or slightly higher to go lower. So that move will induce longs, and market will potentially trap them in their position, long positions. Seems like a PO3 potentially setting up. Yep, seems like so. Alright, let's jump on to DXY. Let's see. I have my drawings from last week's coverage on Sunday. Still thinking the same thing, so let me delete them. Here. That's not a clean structure shift on DXY, but we have a potential break rate block here, which is kind of respected right now. But at the end of the day, I would like to see the 107 level as a drawn liquidity for DXY. So midterm, I'm actually bullish on it. Just because on the daily we'll see it better. All the highs here, they were formed in an original consolidation, right? That original consolidation caused this whole downward move into an old BPR, and that old BPR gave a really strong reaction without sell side was actually getting tagged. So looking at the daily chart, we have a strong reaction there. We have a structural shift, really strong moves there. So I'm reading this as bullish continuation, to be honest with you. This is the first stage. Now it seems like we might be in on the first stage, second stage reaccumulation here. I want to see it like really going higher in a fast manner. The fair value gap on the daily is also respected. On the 4-hourly, I was talking about this last week actually. So on the 4-hourly, it actually completed the original the market maker buy model here. So this was the target on the 4-hour chart time frame. Now because that is completed or delivered, you would expect a consolidation above an old original consolidation when the market maker model completes, right? So we kind of see it here, spends time a little bit above an old original consolidation target, right? Spends a bit of time. Then I see this as a manipulation, like accumulation here above an old original consolidation manipulation. Now I want to see a distribution higher. So this whole move out of that range here, I see that as a manipulation. Lower into an old BPR, which is a strong level, and then rally higher. And I really don't want to see these lows getting tagged here, this low in the old range here. I don't want to see those getting tagged just because that will require a lot of energy from market to get down there, which I'll be covering why and how in tomorrow's class. I'll be talking about that exact thing, and I'll be explaining why it shouldn't go down there and what requires for price to get down an old range like that, old consolidation, old accumulation. So I would rather see a rally here to complete the daily market maker buy model. There's another BPR there, so that'll definitely, it should definitely hold this area, this level, this BPR on the 4-hourly. Hold the level and keep pressing higher. Yeah. Bullish on the XY. Kind of an unorthodox approach because everyone is low-key bearish. Like as far as I'm concerned, that's what I saw on Twitter. Like everyone is like bearish DXY, bearish DXY. I'm like, I don't see that. I do not see that. Let's go on the euro. is again last week's annotations. Let's go to daily here. So on the daily chart, this to me really looks like it's setting up for a buy model, and I would see this sell side rate as a potential turtle soup because the sell side was rated, purged, and immediately after it just pressed higher. As you can see, there are like 6 or 7 consecutive up close candles with a market structure shift. So once this high was violated, which came on Wednesday this week, now we have a new sentiment in the market, right? And if I look at this low that caused the south side purge, it is actually respecting an order block here. A sentiment change here, I would definitely want to see these highs getting rated before anything else. This one, that one, and this is my highest probability on liquidity on the daily chart, which is about like 0.99. That's my highest probability drawn liquidity, because essentially that is an original consolidation on the daily, and it should really like deliver in a fast manner until the draw gets tagged. Before that, I'm not expecting any pullbacks or market structure shifts to the downside on euro. But the thing is, like I just said, like I'm bullish on DXY, and looking at euro, I can't be bullish on euro as well at the same time, right? Because it should be like not correlated at all, right, Fabio? You know forex better than I do, as far as I'm concerned. It should be like euro up, DXY down, or vice versa. Yeah, I don't know. Structurally, though, it looks like it's setting up for that. Like here. Let me check the leading range. There. Yeah. Let's take a look on the 4-hour and see what's going on there first. So I annotated an SMT divergence at these lows with GU, which caused this entire move into a BPR there, here, and what I'm thinking is, I see, so now we're trading into an order block right here on the 4-hour chart. This one right there, which is essentially being respected as of now. Now, if this really wants to go lower, it should really keep up the pace into that fair value gap below the south side level here, right? And if it wants to keep going lower, just because DXY is bullish, according to my analysis at least, it shouldn't really print or form an SMT divergence with GU at this low. So I want to see both taking that low out. That makes the lower south side targets as a potentially a high probability drawn liquidity. But I'll get to GU, but as far as I remember, GU was stronger. So what we might see is just like Euro can turtle soup that low and keep going higher, whereas GU is not getting even close to its south side target on the 4-hourly. But if you don't see a bullish SMT at that low, that means the chances of going lower is more likely, definitely. As of now, though, if I was trading euro, what I would do is, just to be safe, let me delete all that. So we have a like tiny range here, right? From high and low, right there, this range. Preferably, if I was trading euro, I would not touch this price action at all until it's broken one side or the other. So I would be long if it breaks out from the upside. If it breaks down, breaks below it, something like that, then I would look for shorts. Before that, I wouldn't touch it. That's not a high probability condition as of now. On the hourly, same deal. Like for me to go short on euro, first things first, I want to see. So this was the south side target, right? What I want to see is first break the range, take that low out with energy though. I don't want to see it stalling there, and then I would consider a continuation lower. And on the flip side of the coin, for the buys, I want to see that range, the same range, getting broken to the upside, then keeps pressing higher. As of now, nothing on euro, in my opinion. Let's take a look at the 15-minute. That's an ugly range. Looking at 15-minute, the south side should be targeted. Is the high probability target? No, it's not. Just because this price action is not offering me a lot of data to read. Like there's nothing here for me to read the price action. The only thing I see is range equilibrium was tested and gave a strong reaction. So I would see this high where it just tapped slightly into premium as a manipulation, and the last touch in a premium array, to go lower. So I'll be mindful of that, but definitely annotate the range and wait for price to trade outside of it first. The chances of going lower would be more if it breaks outside, or when it breaks outside of the range. Otherwise, there's no way to time the consolidation, right? It could take years. If you look at gold, for example, it's been literally like in a range for like 1,000 days or something. Let's take a look at, and that's how you avoid the choppy price action. That's how you avoid trading the consolidation. You could definitely scalp the 1 minute. That's definitely doable. I prefer not to though. I don't like to be executing in a price action like this. ELM a consideration too could set up a range into second week of March. Speaking back on indices market in general. Yeah, I think I mentioned that last week on Sunday. To me, it seems like let me go back to Nasdaq real quick to answer your question. To me, it seems like because we had a really strong reaction on Friday at the highs, and then if I look at the monthly, what I see here is there's a fair value gap here, a tiny fair value gap from last month, right? So this will be a confirmed fair value gap in about 3 days, market when the monthly candle closes, right? So going back on the daily, knowing that information, I would expect a choppy price action here because it's still in a range. It couldn't break out like yes, just choppy price action, a small range on the daily. Then once the monthly candle closes, I would expect a manipulation into the monthly fair value gap, which is also below the south side. And then if it wants to rally, rally. That's what I would like to see. That aligns with the monthly time frame as well. So once this February monthly candle closes, the low on the daily chart, the south side will be the fair value gap, monthly fair value gap, making it a higher probability target after that. But to me, like because ES and Nasdaq is not like in sync as of now, I am not sure if ES wants to follow Nasdaq, they're going to be in a consolidation for a little bit, like in a range bound market. On the other hand, though, if Nasdaq wants to follow ES, it is gonna keep going higher and higher. It's not gonna consolidate, so it's gonna use the daily fair value gap to go higher. But if you want to be trading the high probability conditions, if you want to be a buyer on Nasdaq, just wait for a meaningful, much more meaningful break above the range. And before that, don't touch it. If you want the highest probability conditions. Where was I? So I was Euro. Right, let's take a look at GU. I'm gonna just pull Euro on next to GU so I can see the SMTs and all that. Let's go on a daily first. Ah, look at that price action on GU. I really don't understand why would people want to trade this, but anyways, that's not my problem. Let's take a look at it. So GU has an order block there, which is respected right now. There are no bearish SMTs at highs just yet, but we have an SMT at lows right there, which set the stage for this entire upside move, right? So the lows SMT here. What I would like to see is, before shorting this, I want to see bearish SMT, obviously, because that'll set the stage for the lows here. That's a consolidation. Long as it doesn't provide a bearish SMT though, the target could be like the rejection blocks here, right? If it wants to create a SMT divergence at the highs, one or the other asset will utilize the rejection block, and the other one will engage with the high, right? You should definitely wait for that. But looking at looking at in the market, because GU is stronger, I would expect GU to run the highs if it wants to create an SMT divergence, and Euro to reject at rejection block over there. So it'll form a SMT divergence for the market maker sell model to target the lows. As of now, though, I wouldn't short either. I'll be looking for lower time frame buy side targets. So same deal on the 4 hourly, just reacted from the BPR level. Maybe there isn't SMT there, no? Yeah, no. And now it's stuck right about there. Not much, there's not a lot of information there. So for shorts, I would wait for that low to be targeted energetically, then I would look for shorts, right? For highs, for buys rather, I'd wait for the BPR to get violated, and then I would look for a short entry, long entries, long buys. But as of now, I wouldn't touch it personally. Let me take a look at the hourly chart. So the rejection block on the hourly got rejected. Now it's back into an order block, respecting it, and there's a BPR there. To me, this looks like it's setting up for the low here. The sell side on the hourly. I don't know how fast it could deliver, but to me that's how it looks like, just because. So the rejection block got rejected, right? Is there an SMT there? Okay, no SMT. So once that rejection happened, an old fair value gap, this one right there, was inverted, right? That sets the stage for me to go lower, and the lower fair value gap was also violated. And now there is an order block there, so the close candles in that range, so order block. So as long as GU stays below it, hourly order block, it looks like it's setting the stage for the sell side target at 1.2611. First stage distribution here is what I would like to see. Potentially create a SMT divergence at the lows. Looking at these lows there. Yeah. So comparing GU to Euro, it takes out that low, GBP. And on Euro, I would like to see this low getting taken out, which will create a bearish, bullish SMT divergence and set the stage for a buy model on the daily continuation. Because it has to complete the daily buy model regardless of the lower time frame look. Let's take a look at crude oil. Crude oil is still stuck in this gap. Now, what I believe, crude oil will target the highs here, but as long as it stays within this gap, I wouldn't trade it because either side is just low probability at the moment. For me to, actually trade a long position crude oil, I would just wait for the gap getting traded high, break out from the gap, maybe a retest, then the highs will become high probability trades for me. Same deal with lows. I would like to see, there's a range here, which I don't think it's going to be traded into again, so these lows should be safe. But let's say if I wanted to target the south side here, what I would wait for, again, the gap. I would like to wait for that gap to be traded, break out to the downside, maybe a retest, and then south side will be a high probability target once it breaks out. And I'll show you why I'm bullish on CL on the lower time frame. I think it was on the 4-hourly. Yeah. So on the 4-hourly, we have the range, 4-hourly range here. And within that range, there is an original consolidation, which I would like to target. To me, that looks like a high probability target. Once it breaks out from the daily gap, though, I would look for it act as a draw on liquidity, which is a 6 level. But it's stuck in the range as of now. Whenever I see a consolidation like this on like any given time frame, I stop trading that. So I would patiently wait for the range to be broken first, and you should always expect a manipulation to those lows and then rally higher, right? For the power of 3. But these conditions are not, like I mentioned earlier, not high probability conditions at all. Like this lower fair value gap should be a great manipulation point of interest, something like that, and I would expect a strong reaction from there. Take a look at the hourly chart. Hourly looks more interesting, actually. So there's a raid here, buy side raid, and there's market structure strip right about here, and our block this level. It shouldn't be traded into again, so it should really keep pressing lower and lower. There's the breakaway gap here. I'm gonna make it red. So to me, on the 1-hour chart, it looks like it is in a market maker sell model. As a target though, that's the tricky part here because I don't see much consolidation at lows, but this low should be a high probability. Hold on, actually I just realized something. So the rejection block got rejected there. Because of that, if it's in the sell model, it should really target this low, the lower low, and it should get down there rather quickly. So in this specific case, I wouldn't use the higher sell side here. It's like engineered liquidity. I'm explaining this on my video, in the video on YouTube. It's basically like whenever you see an engineered liquidity, the actual liquidity pool, which is the lower load in this case, becomes an easier target. So under those conditions, I don't care about the engineered liquidity as well. So this liquidity pool, which was engineered, will be used as a fuel to get price down into the actual liquidity pool, which is the lower low here. I would wait for 75.26 on CL, and then I want to see how it reacts from here. Something like that. And this area, and this range should not be traded into. And if it wants to trade back down there, it'll require much more fuel to get down there because it is not an easy target for algorithm to get down into this kind of price action where it's range bound or like too much back and forth, right? Thick price action basically. It'll require more fuel. And you'll see these ranges getting traded into in a high resistance liquid run kind of situation. Your analysis is just sick. I mean, I'm looking at crude oil, GU, EU. The charts look sick, honestly. Like too much ranging. Not a lot of information in terms of price action. Alright, let's take a look at. Do you guys have any requests before I wrap it up? Maybe I can go over. Uh, let's take a look at crypto. Why did I mark it as marginal consolidation? Bitcoin. Yeah, okay. Tesla. Okay, yeah. I'll go over stocks after crypto. So Bitcoin. I know we have a different look, different take on Bitcoin crypto with you, Fabio, but I'm gonna talk about it here. Alright. Alright, cool. So it seems like we're gonna have a bearish S&P divergence at the highs with ETH and Bitcoin, right? Once that swing high is confirmed on the daily, being a lower high, then that kind of sets the stage for a market maker sell model. And on the 4 hour, you'll see the actual target, the drawn liquidity better on Bitcoin, which is 42,000. So I want to see that area for 2,000 act as a drawn liquidity on Bitcoin. As of now, though, if I zoom in to the price action, the current price action, we're still in the horizontal consolidation area. And in this area, there are a couple PD areas I would like to be mindful about. First of all, this fair value gap, and secondly, within that fair value gap, there is a rejection block here, which makes this price at this level quite sensitive as of now. As you can see, it's like kind of wicking. If it violates the fair value gap, though, something like that could also happen. I would be mindful of this rejection block. It could reject that level. And then I would expect Bitcoin to hold the daily high, which is almost $53,000. as a safe high, so I don't want to see Bitcoin trading above it, violating it, because that means market maker sell model is not there. It's not going to retrace or go for the original consolidation target. But as of now, what I want to see is at these PD arrays on the 4 hourly, I want to see confirmation for the down move first before executing on anything. So I want to see this reacting there, breaking lower, flipping the daily fair value gap, right? Trading outside of it, and then sets the stage for the original consolidation. Right? Once it breaks below the daily fair value gap, then and only then I would consider taking any actions on it. And for the dealing range from original consolidation to the buy side, or the wallet to the buy side, as you can see, it hasn't even tested the range EQ yet, so there's no pullback as of now. I would like to see a pullback. Even if it wants to rally higher, I want to see that kind of pullback into range EQ first. And the good thing about the market maker model is once you have the dealing range down, the drawn liquidity, the drawn liquidity and everything, whenever price trades into the equilibrium of the range, if you get a strong reaction, that usually means you're wrong with the drawn liquidity anticipation. So you can collapse your trade there, which is a great sign. You can just take your profit and move on. Because if it wants to get down to the drawn liquidity, you're not going to see a strong reaction in this area. It'll consolidate. Like the worst case scenario, it'll consolidate at this level and then keeps going lower. You're not going to see something like this, like a V-shaped formation, some call it. You're not going to see that. As of now, until we get a confirmation, there's not much to do here. Once the confirmation is there, look for the 50, not 50, 42K level as a drawn liquidity. And from there on, it could keep rallying higher. We'll see. Let's go on the Tesla. Wow, ETH is really going higher, huh? Weekly looks really strong. I mean, to me, what I would like to see is a pullback first, then Ethereum's drawn liquidity is definitely 35K, 36K, right there, because it's trying to catch up with Bitcoin on the weekly. Bitcoin has already traded above it. Now, I believe Bitcoin will keep its price above that range, above that original consolidation. So it'll be trading above it. Once it's ready, it's going to keep going higher probably. Weekly fair value gap's really good for the pullbacks on the lower time frames. Like, look at this. That lower weekly fair value gap is at the equilibrium of the 4 hourly range, right? So I would definitely expect a sensitive, I would expect that level to be sensitive, and that level is 47.5 thousand. 47.5. All right, let's take a look at Tesla. I'm really looking forward to see what's gonna happen this week. I'm excited. Although we're gonna have monthly candle close, which is gonna be on Friday. That's cool. At least we don't have FOMC. I hate FOMC. All right, Tesla. Tesla is, it's consolidating as much expected. I was expecting this kind of consolidation because the pullback was really strong, right? Now we have a couple fair value gaps here, which should really, the price should really react to it once it trades into it, right? And that's what happened here. So sell side, short-term sell side was rated, went into the fair value gap. Now it's back in the range. I would expect that range to hold the price. The range I'm talking about is basically, I'll just annotate it. This range here. So I would expect price to hold this level. I don't want to see it going any lower than that. Like the worst case scenario, the old weekly fair value gap low, right about here, should be the catalyst for up move. But looking at the weekly chart, my drawn liquidity is definitely 314 and 318 level. I really want to see that kind of move, and it should really come just like this price action here, like a super energetic 4 or 5 consecutive up close candles on the weekly and deliver the drawn liquidity. And after that, I don't know what's going to happen. Whether it's going to rate the all-time highs or not, it's not clear just yet. Got to see how it reacts when it trades above 314 first. So yeah, that's Tesla. Tesla looks good. Tesla is my baby girl. Any other chart requests, guys? Like, do you want me to look at gold or whatever? Like, I don't know what you guys are trading, so I'm asking you. AMZN? What the hell is that? Is it a stock? Oh, Amazon. Amazon looks pretty good. I mean, this chart literally talks for itself. I don't even need to explain this, I think. Um, the weekly fair value gap is much respected, and now it really should send price higher into all-time highs, which is at 189. It should really get up there within the next 2 or 3 weeks tops. On the lower time frame, it's and go on the 4 hour, 1 hour. I'm trying to find a confirmation. So yeah, like on the 1 hour, it looks cleaner. There's this range here, right? And that range was violated to the upside with a gap. That is a very, very, very strong move. Because technically speaking, this range, if price wants to get above it after breaking lower, as you can see, it traded lower, right? If it wants to get above it, it requires a lot of energy and fuel, and it provided that. That is a confirmation on the lower time frame here. Got 185 calls for 19. 185. You should be good with that, honestly. April. Yeah, you should be good with that contract. This looks pretty good. Did you buy it this week or did you buy it before, like way before? By the way, guys, how many in here are trading options? Whether it's like short-term trading or long-term trading, doesn't matter. How many of you are familiar with options trading? Not me, yeah, not you, definitely. I remember your first shot in options. Like, who trades Dow Jones options, bro? Like, like selling CSP, yeah. All right, guys, if you don't have any more requests for now, I think I'm gonna call it, and I'll see you guys tomorrow. Waiting for TJ. He's typing something. You're only futures. That's good. Futures is better. I like futures more than options, anyways. Options is good if you can catch moves like this one here. But there's no way to anticipate a move like that. At least I don't know how to do that. Anyways, guys, thanks for coming by on Sunday night. and hope you have an amazing rest of your day. I'll talk to you tomorrow. Take care.